All right, so I'll be back just in a few minutes. I'm gonna get my water and get focused here, and we'll talk about SPX and kind of what I'm looking for, and also some of the trades that we've taken so far and how we're using that strategy to our advantage. All right, guys, getting back a little early here. We'll get started. Let's go ahead and I'll record this, even though it will be on my YouTube there. And let's just kind of go over a couple of the trades that we've taken so far, and then we'll get over here to SPX. But before I move from SPX, this is what we're looking for. This is a trendy edge. And when prices are moving up into trendy edges, we wait for them to stall, or we're expecting them to stall. So this is supply on a different time frame. So my edges, my indicators, they identify supply and demand on multiple time frames, and we teach what those time frames are. Very simplistic process, if you will, just by kind of color coding things. But the orange ones are for today, and we would expect this top line here to be resistance until it's not. And if we can get and bid over this, then there is a possibility that we could land ourselves right in here for a butterfly today. But what I'm waiting for is to see if we can get a pullback first. I would like to get a pullback at least 23.6% or so of this move. So this is a nice rally. This is a very small candle, okay? This is a 3 minute. So we're going to come up here, come into the pivot high, and you see the 23.6 is around this level. I have an alert. So just so you know, once we get down here, I'll be looking for the butterfly, basically probably 85 to 95 by 38.05, somewhere in there. Okay. So again, we need to get back into this area first. I don't want to buy it now. We want to wait for it to come back so we can, uh, you know, get a nice bargain for it. All right. All right. So this morning, so far, some of the things that we've done, well, we are sitting on a long-term Amazon calls, which are 130 days out, CCL, which is about 74 days out. Both those guys are both down just a little bit today. Amazon opened up, fairly decent and then came right back in. That's okay. We have time there, but our intraday trading's actually been pretty well. We did well there. We traded some BABA equity. All right, made a little bit of money there. We traded, let's see here, Google and Meta. Let's go ahead and go over those so I could show you. And I'm going to pull up this chart here. And these are just for our members. These are recorded and put into the community channel so you can see where I entered, what I've done so far, just so you have a better understanding. So using the indicators that we provide and really just talking about the PMZ, the pre-market zone, is what we wanted to focus on this morning. My entry came on the break of the PMZ. That's this blue automated level. A lot of people ask what that is. Basically, it's data from the pre-market. I love using the pre-market. A lot of traders don't, but we've been using this particular zone or pre-market zone for almost 5 years now, and it does really, really well. So the idea here is before taking the trade, everything is automated for me, so I understand what my risk is, which is right up here on the banners. We understand what the levels are, and they're just kind of letting us know here. The PMZ high, which is this one, is here, and the PMZ low is here, and this is your risk. So when taking this trade, whether I'm trading equity or options, I have an underlining, risk that I can attach to that trade. So for example, if I were going long equity here, I would pull the trigger at this upper level. PMZ high is 87.27. I could round that up to 87.30. Well, actually, just probably about 87.28. I go long. That's exactly where we went long here. You can see we got a nice little push out of the PMZ, and then these automated targets here are called quant pivots over at Simpler Trading that we're using as well. And it may not look like a lot, but we consistently do pretty well here. So 16, 30, 50, 100%, those type of trades, those are pretty consistent. Anything over that is, a lower probability. Our focus is not about trying to hit these lottos, as people would say. So loading up here, looking for quicker and compounding type trades. And then, just kind of managing and trading from here. So we have our targets, we have what we're looking for. And you can see here above, if we can hold and sustain 87.94, looking for 88.40. Now, myself, what I did is I got long here out of the PMZ. I closed up into these targets here to the upside. Okay. And then I went ahead and bought a butterfly, a very wide butterfly for the week. Okay. To kind of capture some of that delta if we can get in there. Now, the next thing is going to be Meta. Okay. Now, this one was a really nice trade as well. Let's go ahead and show you how we traded that one. And again, very easy, straightforward process. Figure out what the name is that I want to trade. It's an uptrend. We can see that. So I'm looking for bids to come out of the PMZ. This is your pre-market zone here this morning, and you can see the numbers above and the low numbers, and that gives me my risk. This one was a little bit more. The risk was about 85 cents. But nonetheless, it came down to the bottom of the box, or the PMZ, and it held very well. And because of that, I wanted to take the trade. We entered here. You can see we got a nice push all the way up into, once again, the quant pivots. Again, giving credit to Simpler Trading over there for this really nice automated targets for my system anyways. And then trimming out of there, you can see we trimmed there. These were, sorry, you can't see that, about 20%. And then from there, I rolled to what we call debits. So basically buying some calls and selling calls against that. And again, making those sort of wide. We just trimmed some of those just a few minutes ago. But the overall target is the trendy edge up here at around 98 for today. So that's the target for today, as long as, that's right, you probably guessed it, as long as the overall trend for today can actually hold above 23 to 38%. Okay, so somewhere in here. So I would just say as long as prices hold above 95.40 today, I like this to hit 98. Okay, so that's what we're looking for up there on Meta. Okay, and let's see, go back up here. And other than that, those are the two trades. So getting back into SPX, I want to show you this. Let's go back here into TradingView. We're going to pull this up, and you can see we didn't quite get down there to target. I want to pick these up for, obviously inexpensive. Notice how the trendy edge is resistance until proven otherwise. Don't get carried away though. Like, I love quarterly, monthly, and weekly candles. The reason that I wanted you to see this is looking at the power of the signals. Okay, the buy and sell signals that are automated through my indicators. And the idea is when you come into the market, you really have to think about what you're doing, right? You have to analyze the market. You got to know what's coming up. Are there catalysts out there that are going to create some volatility in the market? All these things are reasons to adjust, per se. But price is king, right? Price is definitely king. So in saying that, we have these indicators that identify supply and demand, and I have the pre-market zone and those type of things. Those are tools to help us, but one must know how to read the market. I've met a lot of traders who are not good at reading the market, and guess what? Their results are mediocre. They're actually not that good of traders, and really they let a lot of good things get in the way of their trading, like their opinions. So many traders with so many opinions, and if one could just speak in language, a love language would be technical analysis. It's if this, then that. This is supply. If price comes into supply, we want to like trim, we want to pull our stops up. If price comes down into demand, we don't want to buy immediately. It's if this, then that. So we teach that process, and we're teaching it to you, and I hope that it's really helping you guys out. When I look at this here, these candles, right? We could tell those are bullish. These are higher lows, higher highs, but we stalled here. And again, this is supply. So not only is this supply, but that's supply. We're underneath a zone of supply. And what that means is that, uh, you know, there's an overabundance. Basically, once we hit that, we pull back into an area where we have people willing to bid up price or demand. Okay. Now, this is a small time frame. Let's go over here on a higher time frame, say the 4 hour, just so you can get a better picture. Because yeah, sure, we can see that edge is holding price up, but when we come over to the 4 hour, you can see this bigger time frame edge. That's that blue one. This is the daddy. This is the highest time frame edge that I have. Anytime price is bumping up to there, it's a big deal. Okay. See, it's a very big deal. And if it doesn't hold, it's a very big deal. All right. Going back to the past, we won't get into too much information, but going to the past, you can see how well this thing holds and how you can swing and do leap trades off of this. It is not a good time for bulls when we're underneath. Okay. So this week, specifically this week, you need bulls need to bid above this 37.95 area. Okay. Until then, it's going to be very choppy. Now, for the inside and up and inside and down formations, why is this important right now? Well, if you look here, okay, we have, this is a mother candle. This is an inside candle. It's closed within the body of this candle. And right now it's pushing up. That's an inside and up formation. So that is a bullish note that we want to take into consideration today. Don't get chopped up. know that as long as price is bidding here, this is bullish, but you're tapped up against supply. Because of that, we are in a sideways trend with a bullish background, okay? And until price starts to break back down into this body, I really wouldn't be too concerned with the intraday fluctuations as they are right now, okay? So if I'm bullish, what I want to do is I want to come over personally and get into a 5 minute and a 3 minute candle, and I'm looking for my signals, okay? So the signals started popping off actually way back here. Okay, and you can see it pretty much pegged the bottom. We did have one here that was a false. It was a buy signal right into the cloud. Now I prefer, for this to come into and out of the cloud. Notice once we get and break above the cloud, we really start to see a momentum change. Notice that my candles go from red to white to green. This is a really good um, uh, indicator that things are about to change for us. And I would imagine if you're using the TTM squeeze, you could also look down here and see what's going on to kind of get a better understanding if the selling pressure is easing off. And the way that we do that, see, price has come down into a lower demand level. Notice that your yellow bars started to hit. That lets me know that the selling pressure is easing up. So right when we got the buy signal, and you can't see that right here, I apologize, and we got the yellow bars, that's a great confirmation that things could lead up from here. All right, so you could see even on a smaller time frame how we can enter that trade. The cloud itself is telling me to stay in the trade to the upside, and so far the cloud is still holding. Okay, still holding. So this is just a nice visual of trend, if you would. And as long as that is holding, things are still looking great to the upside. Okay. All right. So that's what's going on there. So what do I want again? Let me just make sure I'm clear. If my alert goes off down here around 377.2, somewhere in this area, I want to be buying butterflies for up in here. Now, could I do it now? Sure. But price is so close and it's only, make sure these times are right here. It's 10:22 Central here, where I live in Florida, and we have a lot of time, and I just don't want to buy a butterfly right now that is so close to here, because what if we finally break through this supply here and we start to rip? Then what? Then you're looking at 38.04, my adjusted targets here. Okay. Again, I'd rather buy a pullback, not a breakout in this market. And I personally think that's where a lot of traders are having a hard time. Okay. They're remembering 2020, 21. They try to buy breakouts and then they're getting stuffed. Okay, let's try not to get stuffed. So the patience is rewarded in this game. If it doesn't come back, you don't take the trade. We have too many setups to take regardless. Let's see, an underdog. Interesting that they place price right at the YE before midterm elections. It can't support or resist afterwards. Big move coming up. Exactly. So that's a great point. So right before midterm elections, they got us coming into a major supply demand level. And that's the thing, is a lot of people have a hard time understanding that supply and demand run the market, right? So all these different things. Feds are talking this week. We have CPI. We have elections. I mean, you have all this different stuff every week, right? You guys know that, and it just keeps getting more and more abundant, and it's like, how many things can we have in the market? Now we have Twitter, right? And Twitter, there's a lot of, well, we've had Twitter for quite some time, and I love Twitter, but we have it, and we have a lot of voices, and if you put your attention there and you put too much emphasis on what people are saying, it can really throw you off as a trader. One of my biggest recommendations to you is to try to cut out the noise during your trading, try to concentrate on price action, have yourself a process and levels, and just rinse and repeat every single morning. Okay? Every single morning. And that's what we do here. The majority of good trades come within the first 90 minutes. Then we come into the European close, which we're about to here in about 6 minutes, folks. And then from there, things tend to, a lot of people say we look for direction. And to me, the markets could just go blank from 10:30 to say like 2, and I would be okay. The probabilities of a a very trendy day. All right. I just, it's such a low probability, folks. And once you start to like really understand that, um, your focus becomes a lot more detailed to the morning. And a lot of traders, it's crazy. I hear a lot of traders say that the first 30, 60 minutes are not, ideal for trading, but that's when it's the most active. The issue is that a lot of traders don't have the right process. Okay. So first, again, just to kind of summarize what we're talking about, make sure that you understand how to read the market. And the best way to do that is to concentrate from a weekly, monthly, quarterly candle. Okay. Believe it or not, like that's where the big money is. And our job is to try and be on the big side of that trade. Institutions, not your buddy Sam who might be on Twitter or Ron over here on Facebook, your neighbor, the cab driver, just the blueprint. The candles say it all, folks. You can walk down the beaches here in Florida, and I could tell you by looking at the footprints, right, who's heavy and who's not. It's really not that difficult. So when you're looking at a chart and you take everything away, and you just make it as simplistic as possible, could you come over here on the SPX and pull up a monthly or quarterly? And if we did this, could you tell me by looking at this chart who's in control? Where are the biggest candles? Where are the heaviest footprints? We want to be on the right side of the heavy footprints. Does everybody understand that? So when we see that on the chart here, we could pick that out. Believe it or not, we could pick it out. All right. Like, for example, look at this really big candle. Institutions were loading up on this dip into demand. Okay. Right here. They flushed demand. Institutions came in 2020. The catalyst was COVID. It came down into bigger pockets. A lot of retail had a hard time buying that dip, but you would never know it if you looked at Twitter. Everybody became rich. But then during this whole entire time, the market just kind of pushed and pushed and pushed. Right here was a huge selling inside candle. You could see it here. And as soon as we went inside and down, the market kind of turned its whole entire tempo, right? And now that the market's pulled back this far, right, we could come over here and I think we can measure this stuff, right? We can go to pivot high into the low here. So after it's come back about 30% almost, everybody's still talking about doom and gloom. And like, where does that get you from an intraday perspective? Somebody please tell me. So if you keep like feeding people negative energy, how are you going to come in and trade on an intraday perspective, right? How are you going to do that? It's like trying to hold on to a bag. Hey, I bought BABA at the top, not me, but, and now you have 5,000 shares of BABA in your account, okay? And you try to come in here every day, you're down 70%. You're looking at it, you're like, oh my God, man, this is crazy. Like, how can I trade? Really, you can't, right? Because you're always looking at that stuff. You got to get that negative energy out of your portfolio. Doesn't mean you have to sell it. I'm not here to tell you what to do with your money. But you know what I did a long time ago? I just took some of my stuff, I moved it to another account, and I said, hey, let's just focus on intraday trading. So if you guys have any kind of baggage when you're coming in to trade, okay, I would definitely find a way to remove that baggage. And if you don't think that it's weighing on you, but you're having a hard time in the market, the chances are it's actually weighing on you. Okay? Makes sense? All right. So you got to find a way. What is weighing on you? That's a question I want to ask you today. Today is the 7th of November. Change your life right now. Find out what's weighing on you. It could be a position, it could be something you're holding on to forever. It could be your buddy who's nothing but negative energy. I came across this saying not too long ago, and I keep seeing it on Twitter. And I really started to focus on following all of these like really positive energy, law of attraction type uh, handles. Like, I don't have time to put effort into things that don't serve me. And when I say serve me, I mean like fill me with energy, law of attraction, right? If you come in here, if you come into my room as a member and your focus is negative energy, I'm going to silence that. I do not need to hear it. The only thing that I care about are technicals on a screen to wake up every morning with positive energy and apply that into my teaching. It's addictive. You can succeed if you just let go of the baggage. Now, in order to trade on the right side of institutions, you need to reverse everything you've ever thought of. Guys, I have people coming to me that have been trading for 30 plus years. All right? Seriously. I have traders who come in here who just started trading like 10 minutes ago. But one of the biggest things that I noticed, okay, is that traders who have a lot of time in the market aren't necessarily the smartest traders. They've actually been conditioned to think completely different than how you're supposed to think, right? They're looking at free indicators. Oh, but the RSI says this. The market's going up, and they're the ones that say there's no volume behind this, right? Or hey, CNN said this. These are all just quick signs that you're going to have a hard time, okay? Because once again, price is king. And if you could figure out where the institutions are buying and selling, and then you can create a process around entry and exits of that, then Trendy Trading's for you. If you can't let go of negative energy, the news, and all those type of things, then this is probably not the place for you, right? Because at the end of the day, what I see is about 98% of traders are failing, if not more than that. It's pretty bad. We all make a little bit of money and then we give back our money, right? But when you look at institutions, are they failing? Are the institutions failing you? They're still up, they're running, aren't they? They're doing their thing. So why wouldn't you want to follow institutions? Why wouldn't you want to follow institutions? You know the old saying, buy on the lows, sell on the highs? So easy to say out loud, isn't it? But why does everybody have a hard time? That's because demand is created at the lows and supply is created at the highs. FOMO comes in at the top, fear comes in at the bottom. So as easy as it is for you to say to buy the lows and sell the tops, your brain is not, it's not constructed that way. And the smart ones who run the market know that your brain is not in the right place. So if I were in charge of the market, I would create a catalyst, news, upgrades, downgrades, analysts, all of these outside factors. Just try to step back for a minute, folks, and look from a 10-mile view. If you were in charge of the market, how could you take everybody else's money? And we are everybody else, by the way. Okay? And then there's a smart group of people who put this together and said, well, how do we get price to go down? Because really, if we just let people buy and do things, okay? If we just buy and let people do things, price would never go back down. So, here's this guy sitting at a round table or in a cave, I don't know where. And he's like, Jim, you got a really good idea there. We can't just let the market go up, man. Okay, let's do something like create a news source. What's that? Well, we could just make stories up. We could say some really neat stuff, right? And if we can scare people, then perhaps what will happen is those people will get scared and we can go ahead and dump into where, demand is. And how did we create that demand? Oh, wait, Jim, we created that demand because we bought millions and billions worth down here. We know that. We did it from the get-go. But retail, as long as retail stays sheep and they still watch the news and they still drink the Kool-Aid and they do everything that 98% of people are doing, you're going to lose. Because you are going to sell here and institutions are going to load up. And then when you finally feel like, hey, this is kind of helping me, you're going to go ahead and buy. You're going to buy into another supply zone. It's going to break down on you. You're going to get mad. You're going to give up. And then you're going to be one of those statistics out there that say, yeah, the stock market was just a casino. That's it. Stock market was a casino. You don't want to be that person. You want to be on the right side of the trade. And in order to be on the right side of the trade, not all the time, disclaimer, not all the time. We don't win every single trade, folks. Okay. But the probabilities of you becoming a better trader by using supply and demand is absolutely going to it's going to change everything you do right now. It will change your style, folks. It'll make you look at things completely different. It'll make you look at the masses like they don't know what they're talking about. You will be alone. You will be in your own little bubble. I promise you that. Trendy Trading's in its own little bubble. We think differently. We have different indicators. We don't use free stuff. We don't listen to news. Well, most of us. Some of the new people, slowly get them not to look at news. We just rely on candle structures, Fibonacci, supply and demand, trend, and then to top it off, we teach how to trade options, equity, futures with stops. Many services out there say you can't put stops on options. That's crazy. If you have a good process, you should probably use a stop. Okay? Because your process says a lot about you, right? Right? It's like I have an option session. All right, give me a second here, guys. So I'm going to stop this stream. I hope you appreciated it. All right, can you guys hear me? Let's go ahead. Can you guys hear me? Sorry about the delay there. Thank you, Lee. Appreciate it. I don't know what schedule I was looking at, but I didn't see that, and I apologize. I was having a good time though. Yeah, good to go, John. Thank you guys. Thank you. I was having a good time. I was actually live out there on YouTube. So if you guys want to catch the 10 minutes that you didn't hear me, I highly recommend you go listen to me. I was on a roll. Let's go ahead and get started with today. I'm actually going to start this with my sincere apologies for being late. It is Monday. It's 10:39 Central Time here in the beautiful state of Florida. I'm on the water. Just came back. I flew in last night back from Sarasota down south and hung out with my developer. We're always trying to come up with things, new automated things, and also talk about, indicators and all that fun stuff. So, yeah. Hey, thanks. Appreciate it. Thanks, Big Money. Let's go ahead and get started. So, I want to go over again. This is how I like to do my sessions here. I talk a lot of psychology. I love to execute trades, but I also want to spend time with you and show you what I did. You can go back and look at the videos. From what I hear in here, they're archived, and you can go back and you can see all the sessions that you missed. I am a professional supply and demand trader. Okay. And one of the biggest things that I was just preaching about was that you don't need a whole lot of nonsense, meaning news and you know, free indicators is what I like to say. If the indicators are free, guess what? 98% of the traders and the market makers are looking at them. So you want to think differently than the rest of the market. And really, at the end of the day, that's what supply and demand is all about. We are trying to find trades that are lined up with institutional buying and selling. Okay? So again, over and over, I'm just going to keep telling you that. Very important for you to understand that. Okay? So this morning, I want to show you a couple things. You guys, if you've been watching me, then you know about the PMZ. The PMZ is like my go-to trade every single day. It's called the pre-market zone. It tells me what my risk is. Okay? It tells me where I should go long and where I should go short. It's really straightforward. But behind that, there's a lot to it. And that's what I teach. So again, supply and demand and so forth. Let's go ahead. We're going to let's go ahead and bring up our charts here. So my indicators are on TradingView. They're also on Thinkorswim. And I want to show you the trades that I took today. Now, what am I using on my screen? Okay, like I said, my own indicators, but I'm also using, and I love these, the quant pivots, and I'm using the TTM Squeeze Pro. Okay, those are my go-to guys, right? On top of my indicators, because I found that those two really complement my style. All right, so I'm going to take you through this. First of all, Meta was a watch for me this morning. Okay, now my go-to are higher time frames to smaller time frames. Okay. So let's just go ahead and go over. Let's go. This is going to look messy down here, and I apologize, okay, because I wasn't ready for you guys. This is going to be messy, but you'll see what this is. But basically, we're extended to the downside on the weekly, okay, to prices, that haven't been seen for a very, very long time. And anytime that prices come all the way down here, I want to be looking down and to the left. And for my indicators, and we don't need to dissect this right now, but see all these green arrows? Basically, my indicators are identifying demand, okay? So what I'm looking for is for buys to step in there. So I've already assessed that. I could draw a line. I could take these green arrows, come across here. Guess what? Price is there. So then what I do is I go into a smaller time frame. This is going to be the daily. I start to assess from there. I look at the red bars on the TTM squeeze. I look at the divergence. I move over to the 4-hour, okay? Something like this. And again, I wasn't ready for this, but we're inside the cloud. I know that we are expecting a little bit of choppiness. And then I bring it into the 5-minute chart. So when I take the 5-minute chart, this is where my pre-market zone is. The first thing that I want to take into consideration is, what is the trend? My name is Trendy. Right? Sounds crazy, but it's actually, there's a lot behind it. All right. There is an acronym there. T stands for trend. R is range. The 3 stands for 3 to 1, so risk to reward. N means no news for me. D is supply and demand, demand and supply. And then Y stands for you. You, because after all this stuff that we teach you, it still comes down to you. Right? I could give you the keys. I could tell you everything you need to know about supply and demand. However, you can still jump in the seat and still have a hard time trading. That's just the reality of trading. Okay? So this morning, let me go ahead and show you. Because of the overall trend is up, I'm looking to buy the dip. Does everybody understand that? The trend is up. I'm looking to buy the dip. All right, let's go ahead and pull this back just like this. Well, for me, I buy the dip in what's called the pre-market zone. The pre-market zone is an automated zone that pops up on the screen. You got the PMZ high, you have the PMZ low, and then it tells me what my risk is for the day. What's really important about this is I'm huge into risk. Matter of fact, folks, I would probably tell you you could jump into the market every single morning, flip a coin, heads go calls, tails go puts. What's going to define you as a trader is how well you manage your losses and your wins. And believe me right now, everybody talks about losers, but I think it's harder to actually hold on to your winners. Does anybody else feel that way? Seriously, do any of you feel that way? When you're jumping into trades and you're in a trade, how in the hell do you hold on to these winners? Because you've been through so much baggage, right? Last week, I tried to hold a winner. It went against me. I lost 50%. I went to sleep with Baba. I woke up and Baba did me wrong. It's down to 80%. And so when you're finally in that trade again, you're like, oh man, I'm up. I'm up 15%. I'm up 20%. It's time to get out, and then you find yourself giving away those profits and then you're mad, right? So trading is not easy if I haven't just made that clear. So to the downside or upside. So the best thing you could do is be a good steward of your money, right? How do you manage your money? And I am big on that. And that's why here on the PMZ high and low and the risk, I always know how much I'm risking going into a trade. So equity traders, if you like to trade equity, I love trading shares. I use my margin for that. I use for good names, by the way. I don't put margin into like penny stocks and stuff like that. Next thing is with this risk, you can also assess how much risk or how much you're going to lose before you take an option trade. So all of that is really, really important using the process that I teach. Okay. So once price came into the pre-market zone, and guys, I've shown this plenty of times in here. If this is your first time watching me, please go to some of the videos that would be here at Simpler. But I'm looking to go long. The first thing that I noticed is that price came down into the lower end of the PMZ, and we started to go bid right away. I then got a buy signal. I took the trade right on the break of here. We trimmed at 20% here at the quant pivots. And again, those quant pivots being great targets for me. And that's how I can assess whether or not this is going to be something that makes sense to me from a risk to reward. Okay, so basically what you can say is, hey, if I'm going long at the top of the PMZ, let's just say at 94, and this quant pivot up here is at 95.28, well, I know that that's $1.28 from my entry, and my risk is 84 cents, folks. Okay, so again, risk is underneath here. My reward are these quant pivots that I'm looking at that to me are automated targets. They're going to be resistance until proven otherwise and so forth. And you guys can see some of my automated targets over here. Okay. So ideally what I would like to see on Facebook is that we hit 98. Let me show you a couple tricks. Okay. And just so you know, I trimmed and closed in this area here. And then I rolled to call debits. So basically I bought calls and then I sold calls against it. Okay. Yeah, JPL, that's a great question, but that's in my code, so I cannot tell you what that is. But thank you. All right, so for right here, if we wanted to measure, we could go from the pivot low into the pivot high. And this is one of the first things that I taught. Okay, this is one of the first things that I ever taught when I went over to Simpler, and it really helped a lot of traders. And if you don't mind, let's just go really quick to a whiteboard. Okay, so price comes down. All right, it's find some love in a demand zone. It gaps up on you up here, and then prices continue to move to the upside. And what I will tell you is wherever price started from, I want you to measure with some Fibonacci. And when it starts to pull back, what you should be doing is taking your measurements, okay, just like this. Let's say that's the entry of the Fibonacci. Do it at the pivot high And as long as price is holding, okay, between that 23% and that 38%, I would expect buyers to move in there, okay? So again, what you're looking for is a little dip here and then buyers step in. This is what I call a bullish zone. And it's amazing how many traders actually give up on their trade right into this zone, okay? So notice here, I'm doing the same thing with you. I'm going ahead and measure from the pivot low into the pivot high of today's action. Notice that price is holding within the 38% and the 23.6 right now. So if I were a long-term trader as an intraday for today, I feel pretty good as long as we are holding above this level. Now, I'm big into committing to candles, okay? Commitment to candles. What does that mean, folks? Let me show you really quick. I like using a whiteboard. So what that means is, hey, I love this trade. It looks awesome. And then there's this beautiful cloud that's underneath, right? It looks like that. And you say to yourself, I want to stay in this trade as long as the 5 minute closes above the cloud. This might seem very trivial, simplistic to you, but it actually took me a long time to catch on to. And I kept seeing this happen to people. And what happens is that the price drops, okay, just like this, and they get stopped out, right? They're like, hey, as long as it stays above the cloud. I've seen stuff like this, and then by the end of it, it pushes back up, okay, comes back up, and then you get this. So here, right, at Trendy Trading, what I teach is commitment to the candle, okay? I commit to the candle. So this also has something to do with my swing trades because see, a lot of people, they concentrate on what's happening right then and there. And then when you go back and look at the technicals, you're like, dang, you know, what happened here, right? Because right here, we went underneath the cloud. We went underneath the cloud, but look at the commitment, right? Everything worked out very well. All right. Anyways, in your trading, folks, I just want you to see that. I hope it helps you. All you got to do, just measure it. If it stays above the 23 and the 38, just watch it. Do me a favor and watch it. Okay. If it starts to break down, things change. From a golden Fibonacci rule, the 618 is in charge. The 618 just simply means whatever we measured, as long as the 618 holds, this trend is intact. Write that down. As long as the 618 holds of the trend that you measure holds, the trend is intact. It's not until we start to go ask below those levels that this whole morning is wiped out on Meta. Okay? All right? Very nice. So that was my first trade in Meta. Still in this. Again, roll profits into call debits there. And then I want to show you my next trade, which was Google. Okay. All right. So Google, kind of the same thing you would guess. All right. I looked at the overall trend of Google. Okay. You can see here. It actually was trending up. So my job today was to be patient, wait for price to kind of come in. You can see the first couple, 5 minute candles wick people out and so forth. As soon as we started to show that we wanted to hold within the PMZ, folks, I went ahead and went long. This is literally my entry here. And then we pushed up T1 16%, 22%. And then I went ahead and put on a very wide butterfly here. Give me 1 second so I can pull that up and show you guys. All right, so for myself, my wide butterfly is 90 by 95 by 100. Okay, 90 by 95 by 100. And let's go ahead and go over here. I'm going to clear out all this. And remove clear drawing set. There we go. All right, so this is the bigger look. All right, so you might be asking, well, why 90, 95, 100? That's because I'm looking at the divergence between price and this cloud here, and I'm looking at supply. So any level to the upside that's automated, this is all supply that I would be concerned that price will not get over that. The true inside and down formation is right here, just like that, right here. That is supply. And then your demand is going to be right in here. And again, I have all these automated targets, but I like to teach you guys how to find it by formation. So I'm using this right here. It's going to be demand. And if I look up and to the left, I have, again, all these automated levels. I have 90 right there. And then we have 92 and so forth. So this is why I'm using those levels going into my butterfly. So it's early. It's only Monday, right? Anything can happen. What is the title of the best video to see your trading approach? Sorry, first time with you. Thanks. Nice to meet you, Sam. And like what you are saying, I appreciate that. So, on my YouTube page, I have, it's color coded. We have what's called trendy lessons. They're in yellow. And I did a really good job by trying to keep these under 5 minutes. You can tell I like to talk, I like to teach. And so I believe that particular video set that's on YouTube will get you in the right way of thinking about supply and demand. Okay. You can see up here though, this cloud is going to be resistance until it's not. Folks, if you don't have an EMA cloud, EMA clouds are the way. They really help you understand the trend. When price is underneath them, they are resistance until proven otherwise. You can see that. And at some point, you will go bid, meaning buyers will step in. And the only way to really understand where that is going to happen is if you understand how to identify supply and demand. Okay. And I teach that as well. And all of that is free on my YouTube page. Okay. The indicators themselves are for convenience, and that's why I use them. All right, let's go over here to something really important. If you haven't heard me say this before, ES futures are what I use to basically trade my entire portfolio. Okay, so this is how I trade my portfolio. Does that make sense? If this were the mothership, which that's how I view it and have been for many, many years, this all has to be in sync with how I'm going to trade. Let me explain to you. All right. First of all, the ES futures, for every 10 points, you're looking at $1 in the SPY. Okay. So no excuses. Doesn't matter if you're a futures trader or not. This chart right here will help you even if you don't trade futures. Okay. Every 10 points is $1 in the SPY. All right. You can literally trade right off of this chart. All right. So looking at this, let's go ahead and go to the weekly. And also, guys, if you don't know how to set up your thinkorswim where you can quickly go through your time frames, I have a video out there as well to teach you how to do that. This is a must. If you want to be on the up and up and have an edge on the market, you got to be able to look at time frames very quickly, okay? So this right here is my weekly. We have demand down here and we have supply up here. This is the bigger picture, okay? Where is going to next? I cannot tell you. Okay. But what I can do is wake up every morning and coach and help get us there by just doing a run through of the different time frames. So for example, I can tell you coming into this week, it looks very choppy. I think a lot of people would agree with that. There's a couple reasons why. On the weekly, once again, we cannot get over the trendy edge here and we are having resistance at the cloud. Let me go ahead and zoom in for you. Do you see that cloud? That is a EMA. Let's just follow it as I draw. Notice that we popped there this morning and we resisted. Okay. Mine expires this week. Yep. So notice how we popped up in there. That is something I teach you. It's not anything secret. There's no secret sauce behind this. If you got these EMAs on your chart, you know that when price is underneath it and it pops up, it's going to be resistance. Okay. All right. So resistance for right now, it's sideways chop. Let's go into the daily because we get a different picture on every time frame, right? So this is right now what we're looking at on the daily. Now, I give these over the weekend, just kind of give everybody a clean picture of what we're looking for. It doesn't mean we can't go long, and I'll get to that here in a second, just because we don't come down to this. I'll go over that in a second, but this is from a bigger perspective. Notice we have supply zone over here. I've already annotated it. I would expect a short in here or resistance, okay? Right here, I expected resistance. You can see we have resistance. Let's go back to commit to the candle. Look at the time frame that I'm on, folks. I'm on a day. That means you have to commit to this candle today. We will not know what this thing actually wants to do until towards the end of the day, right? And then we have 15 minutes of maintenance or so. So just understand that. Right now, it's resistance. See, this is where people get confused. They're like, well, this wasn't resistance here, but I commit to the candle, and this is probably the most important thing. So for my portfolio, the way that I'm thinking about today is we are taking trades quickly. Okay? Why am I taking trades quickly? Because we are in a chop situation. Does that make sense? Everybody understand that? So in order to really like be on your A game, when you come into the market, you must know and expect something. If you just came into the market and was like, I just want to make money today, that's not going to help you. All right? Because you might, for example, the Google and the Meta trade that I took, I only took 20% from those. Okay? Took 20% from those. And in a trending market, we could have made 50%, 100%. All right? But I knew coming into this market it was not going to be easy. We got all kinds of stuff happening. We got CPI later in the week. We got talking heads every single day from the Fed. We have elections, and so in my mind, we've been really sideways coming into elections. And the idea is that that will be the catalyst that actually kind of moves this market, whether it be to the upside or downside. My job is not to sit here and try to figure out what direction by guessing. I have no idea. It's a if this, then that situation. All right. So, what I can tell you with lots of confidence, I'm very confident in the way that I trade, is if we can hold above the trendy edge or this same thing that says resistance, okay, this is a trendy edge. If we can hold the day above there, tomorrow could be a trending day to the upside, okay? Right now, topping wicks say that the bears are in control. And as long as bears are in control, you want to be careful to the upside, okay? All right, higher lows. We're making higher lows. Lower highs equals a sideways trend. We got all sorts of confirmation here, don't we? That today was just going to be a choppy day. All right, lower highs, sideways trend. Now let's go to the 4 hour. This is where we start thinking about making money, okay? So this morning, for me, going into the futures, okay? Into the futures, I put out my notes in here and I said overall market's flat as we get ready for the wild week packed with earnings, talking heads, CPI, elections, all that stuff that I just told you. And my daily supply is 3795 by 3805. Okay. And I went ahead, I annotated this, and then I sent out the chart. Then our mid support 3770 by 3750. Daily demand 3730 by 3710. Okay. Everybody understand that? So this is how we approach every single morning. Notice how well the levels are working, folks. These are the levels. Price popped into supply. It came right back down. We're getting close to the support that I've given to the futures room. Okay. And we're looking for support here. Now, I don't know how many of you have listened to me before, but how do we figure out in support if this is where we want to try a trade? Can anybody try to guess that for me? Anybody have any idea how we would kind of figure out if we want to take a trade here? let's say ES futures, um, SPY long, something like that? Anybody have any sort of idea? All right. So, we had a couple, yeah, balanced wafer test of level. That's nice, Ron. I like that too. So one thing that I will teach you guys is once we come into support or we get near support, okay? Once we get close or near support, what I want you to do, and I've been teaching this in here for almost 4 months, is I want you to use your TTM squeeze. The levels work. Now we need something to kind of like help us, right? Because what I did learn in supply and demand training, right, is that when your zone breaks and you get stopped out, it's really frustrating, right? Or if it turns price too quickly and it doesn't come down to your level and then you chase it, then you get stopped. That's super frustrating. So what we do as when price comes here and very close, and you can see guys, we're very close there. All right, it's okay for me to be off a little bit. Is I want to come over to a 5 minute chart, okay? And let's get those levels real quick. 377020. So about right here. Okay, and then the other one is right around the 50. So this is very wide. And I said my notes today were the zones are really wide today. And the reason why I made them wide is because of the volatility. So what happens when price starts to move down? You get these red bars, right? Okay. What I'm looking for are yellow bars to appear. This means that the selling pressure has eased off. So for any of you folks that are trading quant pivots, and I've had quite a few people reach out to me and they're like, man, I'm applying that methodology to the idea of the quant pivots and it's really helping people out. And I love to hear that. So when price is coming down to these, okay, look for yellow bars. For example, notice here, we come into a quant pivot, check these yellow bars out. Now, I personally like to see two, okay? I personally like to see two yellow bars, all right? And again, you could do this on a 5 to 3 minute chart. The key here is that we're actually identifying sound levels that you trust, and then we're using the TTM squeeze as a tool to help us identify entry. Does that make sense with everybody? Anybody not understand that? Sounds like you guys understand it. Seems like everybody understands. Yeah, Sereni, as price comes down into a level. So for me, I use a lot of demand levels, okay? So like my automated stuff is demand levels. The quant pivots, I don't know the source code behind that. I'm not exactly sure what that is, right? But what I do know is that they work. You just have to apply the right methodology, in my opinion. So they work great as targets. So if price is coming down into any line on your chart is what I should be saying. If you have any line on your chart, I want you to go to your 5 minute to 3 minute and check these out. Okay. And then go ahead and what I'm looking for is the red bars to move to yellow. That lets me know that the selling pressure is easing off and then I feel more comfortable about my entry. I hope that helps. Okay. Yep. Come into support and watch the yellow bars. It's really straightforward. Yep. Uh, how are you defining supply and demand zones? Trader Momo, that's on my YouTube page. Up top, somebody put my YouTube page in there. Very straightforward. Yep. Formations. Yep. Just using formations on the chart. You're welcome. Yep. So like this bounce, right? We see the bounce. You know, for me, it's cool. Let it bounce, right? But I'm not getting anything here. It didn't touch the quant. It didn't touch my edge down here, and it didn't quite touch my support, and that's okay. Like if I miss it, that's the big thing, folks, that I've learned over a long period of time. Don't chase things. Like it's okay. There's so many opportunities, you know, and I'm usually really confident that my levels will be hit. So one of the things that I will tell you is over here, we were looking at SPX, and I was actually looking to get into a butterfly today, and I think we actually, yeah, we definitely came down into the level. Let's go ahead and turn my levels on. All right. Yep. And so we came down to where I wanted wanted to get here. And then I realized I was supposed to be in here, and I apologize, but I wanted to target a butterfly for this area right here on the pullback, and I could see that I kind of missed that, but we came into 68, and I was looking. I might want to readjust this and see this trendy edge just to kind of show you guys proof of concept. And I've done this many, many times, but this is a trendy edge or supply. And this area right here has been resistance all day, folks. And this is what we call a double stack. So this is a trendy edge, and so is this one. So there's two. So basically, all you have to do is just put a zone in here, and this is your supply for right now. Okay, just kind of show you what that looks like, just like that. I have to say this because I know that Simpler uses TradingView and Thinkorswim. One of the best things about TradingView is a couple things, actually. I can use this on my phone and it looks just like this. I could be at a restaurant, and if something goes over the PMZ, I can go long, and I feel very comfortable about that. If it goes under a PMZ, I can go short, and I feel comfortable. It tells me everything I need to know on my phone, which Thinkorswim has not done that ever. The next thing is the creativity of it. Like I can create all my templates. You see how I can create the zones. Um, you know, my lines say support or they say target. You can save all your templates, which really make this uh, user like I love it. It's user friendly. So, anyways, so right now we're getting that. My targets. What I wanted to do was a 85.95.05 on my butterflies. Let's see here. And I'm gonna price those out really quick. And I'm late here because I came in. This is exactly what we were looking for. So hopefully some people got into that were following me earlier. But I want to price some stuff here just to see. Let's see. And you guys can hear me? Yeah, you can hear me. All right, so SPX. And then I'm going to show you one demonstration really quick on a PMZ before I get out of here. Hopefully we'll have something. But let's see, again, looking at like 85.95.05. I'd rather do this towards the end of the day though. So maybe we'll get one more pullback when we come up here towards that edge. So 85.90. I just want to see what they're priced at right now. So right now they're $1.40, you know? So I do feel like I missed my opportunity. They were probably a buck down here, and that's probably what I was looking to get into. Yeah. You only get oh yeah, Skydiver Gem. Great you know that you brought that up. I actually pay for in my room. I make sure that everybody is using the same data. So I use this right here. This is just me, by the way. This is the data that I use. And it costs me like $4 extra a month, you know. But what it is, that data for us, because we have our indicators on Thinkorswim and TV, this is the data that matches the data for my stuff, for my indicators. So very important, but it's only a couple bucks, so not a big deal. Not a big deal at all. So anyways, I'll relook at those SPX butterflies if we get another pullback into this area. I would prefer to buy them for $1, if not just a little bit less, okay? Let's go ahead and pull up Thinkorswim just one more time. And then we are going to pull up this right here. I'm going to put up my indicator, my scanners. So my scanners are pretty cool. What they're doing is they're identifying supply and demand, which is really, really neat, right? I don't need to look at a bunch of different charts because it's written over here. Each one of these colors identifies the time frame of the zones, and then like it says lower or it says upper. So lower is demand, upper is supply, and then PMZ trades, like if I'm just looking to scalp, then I just double click here and I come into here like Google. It's in the middle of the PMZ again, and so I would just come over here and just kind of show you how this works really quick. Okay. So you can see we came into the PMZ again on Google. And today we took it right here, right? I showed you that earlier. And once again, I get the opportunity. It's like, well, do I want to take this trade to the upside again, or do I want to go short? And right now, because it's the middle of the day, you guys got me at a weird time, but after the European close, I'm just not as aggressive in wanting to take a trade right here, if that makes any sense. Yeah. So what I'll do, so since this is like the middle of the day, a couple things to take into perspective. Again, like Google is running, it looks really nice. For me, there's really no opportunity here to do anything at the moment besides my butterfly, and that's longer term. But if I wanted to scalp around, there would be a couple reasons, to go short here for me is because my risk to reward, as you guys can see, my risk up here is 22 cents. And if I come down and find my first target, it's going to be this guy and this guy. And then my stop would be right at the top here. I mean, that would be if it's breaking down, you know. So you could see the risk to reward here is actually not too bad from a scalper's idea. But because it's the middle of the day, I'm not wanting to do anything at the moment until we start to get some sort of trend. Everything was made in the first, 90 minutes of the day. Now you just have to be super patient. Let me go over a few things with you guys until we see something best set up. And again, I'm watching SPX on the side here, and I'll let you know if I take something from that angle. But a couple things that are really important going into this week are going to be the dollar. I want to go over the dollar with you really fast. For me, this is a monthly or quarterly is what I would concentrate on. Let's go ahead and hit auto. And this was my blueprint that I put out months and months ago. And so we hit all the levels I thought we were going to hit, and we finally got a topping wick. We're inside on the quarter, and this leads me to believe that the dollar is now going to drop. This is an inside and down formation. That the dollar is now going to drop towards 108.3 and then into the cloud around 106.73, where we would then bounce from the cloud. But overall, I do believe that we come into the demand level of about 103. And that's a if this, then that scenario. If price stays under the formation here at around 112.50. So as long as it stays under 112.50, I do believe we hit all those levels to the downside. Okay. The next that I want to look at is TNX or the Treasury. I want to see what it's doing. This is also a blueprint that I put together months and months ago. We had resistance there at, for a little while. We tapped that. We held the bullish channel. We continue to move up. So you can see the damage here. Now, I wrote this in here. It doesn't mean anything. I just wrote this for myself, possible capitulation event. I'm just really interested what happens here around 4.5. I was using a quarterly chart, okay? And the quarterly chart shows me that we can indeed push up into this area. And I would be shocked, I could be wrong, but if we push through that, then you're looking at the top over here at 5.2, okay? So that's what's happening there. And then my last thing, I love to talk about the skew. I'd reached out to John Carter on Twitter last week about the skew, and I want to share something with you guys. I was interested to see what his comment was on it. The way that I use the skew and all of these things is in relationship to supply and demand. Okay. Very, very important. Because if you think about it, if the skew, the hedge funds are saying it's a risk on environment, but you're coming into supply, then this is not accurate. Okay. Supply and demand rule the market. No ifs, ands, or buts. That's how it's been like that since the inception of the market. Okay. And since we were coming into supply, even though this said risk on, last week we kind of got that pull, right? And now what's interesting is we have to chew through supply in order for me to feel bullish again. Okay. So these are just tools that kind of help me out. The TNX, right? The dollar and the skew. These are really important tools for me. But they have to make sense. If we were risk on environment and we were coming into demand, that would be a different story. I would jump all over this. But that's not where we were going into. So this has been just as false this year that it was last year when it said we were coming into a protect risk off, right? And then we got this melt up into the end of the year. And, it seemed easy for a lot of traders, but if you were stuck on the technical analysis, we kept thinking, hey, be cautious here. So it was hard to be like fully allocated on that run. And this year, it's really difficult to really time some sort of bottom because everybody, and I'm not saying we haven't timed, good bottoms here on intraday trades, 1 to 3 day trades, but like a long-term trade, it's pretty difficult right now. Okay. Because the rallies aren't lasting very long. All right. JP, no, I do not use, I don't use volume at all. Okay. Because listen to this. Supply and demand, they are volume. These are institutions that we are identifying. I'm identifying supply and demand on a quarterly and a monthly chart, not on a 5 minute chart. 5 minute charts where retail lives, that's where we live. We're lining up supply and demand on higher time frames, and then we're entering on smaller time frames. Does that make sense? So my whole process, it's a macro way of looking at how do we enter on that? Because a lot of people they have a hard time, right? So depending on people's size of their accounts. So if I told you that this was a beautiful demand level, okay, and retail kind of bought up here, and then the market kind of faded, right? Kind of like it did this year, it bounced a little bit, and then it fades down into this demand zone, okay, that's right in here, all right. The problem is that I'm looking at quarterly charts and monthly charts. So we expected this, but to enter this zone, they're going to be really wide. Okay. So you have to have some sort of process that will get you in the trade with less risk. And that's what I teach. Okay. So a lot of things have come down into really big demand zones. But the problem is that your process, if you find it on a quarterly chart, in many, many cases, that demand level doesn't really work as well until a few months if you're looking at it quarterly. If you're finding demand zones on a weekly, you should see it within a couple days. If you find a demand zone or a formation on a 4 hour, then I would expect my formations to work within a couple hours. Okay, so time frames are very, very important to each one's own trading style, if you would. All right. Very, very important. Notice I'm talking a lot because I understand what chop means, and I know when to kind of, pump the brakes on our trading. So again, we got our trades out of the way early this morning, and right now it's just the time for me to sit back and let the market kind of digest what it wants to do. So for the next 5 minutes, if any of you guys have a chart or something that you would like me to take a look at, I'll be happy to share that. I know that every time I've been in here, somebody's asked me about gold futures. I love trading futures as well. And so when I come up here, I've been waiting for this zone. It's popped so far. It looks pretty cool, but I would expect gold to probably hit this cloud and then back down. So for me, folks, I'm not interested in gold until it gets down to about 1,591. So I just want to go over that one more time. Okay. All right. Is eBay still around? Just kidding. All right, so on this one, Serini, this is an inside and up formation. What I could tell you about this on using supply and demand, that you're stuck in a range. Okay. So I like to sell credit too. So for me personally, that's where I'm selling credit. And then I have an inside and up formation, and I want to be selling credit probably right into this area as well. This is what I would consider neutral. Um, you could still have fun to the upside, in this trade, because the divergence says that we can get to 43 as long as this edge right here holds. So we're going to put that right there. And that's going to be support, just like that. And let's go ahead and make this, instead of say sell credit, let's go ahead and put that as a target. That's a longer term perspective. Again, you guys would have to watch my videos, but this is an inside and up formation. This is an inside and down formation. I would be targeting this formation for the upside, and that number right there, again, is at or around 43. Okay. Nice. Very good. Good job. Yeah. Let's look at MU really quick. And so I got 3 minutes here. All right, MU, beautiful. Okay, so for me, this is an inside and up formation again. It also, check this out. This chart looks just like the one we just went over. So you can see what I mean by understanding like where it could go to. Okay, so notice how we're going inside and up here on this one, Jack. Okay, inside and up. And notice how I told her or him right here that was the target. See how we came right up to the inside and down? Notice how this one also came to the inside and down and then rejected. That's why that's so important. So what I can do here is that I understand that between the inside and up and inside and down, this is a neutral. I mean, you should have already made your money from the break of this, but there's nothing to really do here. Now, I would much rather see this build value over 56 and a half before I do anything. But this is a beautiful chart and could push up towards the cloud, which is around 60. Again, if this, then that. Okay. Square from a monthly perspective, it looks pretty good. Let's go into a little bit smaller. This is what I had out there, just so you could see that. Got some shapes on this. I do expect it to push up. Um, this is your weekly. Let me look at the 4 hour. This is probably where I want to be at. Yep, the 4 hour. See, this is the trendy edge. Matter of fact, somebody was looking for this morning. I gave them a target. It hit our target. I believe that person's already got out of the trade. So the trade this morning was to go long over the edge and trim right here, and that's already happened. So notice that the trendy edge is working very, very well. So again, that is supply, folks. Down here is demand. This is supply. Price is hitting supply. There's topping wicks on square. So for right now, bears are in control. You got to be patient here. I need to see a day or two at least hold above the trendy edge, which is around 62.25. Okay. Yeah, it actually took Baba on equity today. So unfortunately, I only have just a few seconds here, but you know, I like what Baba's doing, but notice it's hitting the edge. Your play right now for me has to hold 68.75. Targets to the upside are 70.32 and 72.05, but my stop would be no less than $1.25 or no more than $1.25. That's just me. You guys, I apologize for the lateness in here. I must have looked at the wrong calendar. I appreciate you. Thank you, Simpler. You guys have a wonderful day. We'll talk soon. Yeah, I didn't realize I'd be talking that much. I had no idea that I was supposed to be on there. I'm trying to go back and look. I must have looked at the wrong. You go up here and take a look real quick. Which one did I look at? Okay. Oh, it's because usually I'm green and I didn't see it. That's why. I gotta look closer now. No. Okay, Jonathan, 10:30 to 11:30. Got it now. Now I gotta really pay attention. Let's keep looking. Okay, I see. Okay. John M. See, now over here it says John M. and one says Jonathan. I need to like, they're confusing me. It's, there we go. Gotta copy this because I have no idea. Hi, I was a few minutes late today. Okay, Google and Meta still positive. BA. Are we still NBA? We are. What do I have here? The hell is going on? Do I have a position in BA? I'm so confused right now. No, right? I do not have a position in BA. Or do I? No. Okay. Wait. I sold put credit spreads. Yeah, there it is. Wait. What is going on here? It's not showing me my position. That's where I'm confused. Oh my God. Okay. Got it. Sorry, guys. Talking to myself. It. I had it in my spread section, and it wasn't showing me my quantity. So I'm like, I don't even have any. So why am I in this? Hey, babe. I have to tell you guys a story. You probably, some of you won't care, but um, I was in a breakfast place in Sarasota. This is crazy. And one of the guys, he was a member in here, and he has like 2 million followers on TikTok. I've never met him in person, and I was trying to help him in trading not too long ago. And we're sitting there eating breakfast, and my wife is facing the back of this place, and she's like, You're gonna have to sit where I am right now." I didn't even like ask why or anything. She got up, I sat down, and she's like, "Look across there." And there he was. I was like, this is crazy because honestly, guys, like highly follow TikTok. It's like seeing a movie star. And I'm like, oh shit, that's crazy. That's Caden. And Caden and his buddy and his wife, they are some of the funniest people, man. They're nonsense. Like they're definitely just crazy young kids. And I was talking to the owner of the restaurant place. And anyways, I went up to him and I was like a babbling, like just a mess. I'm like, wow, that was not trendy. Like super embarrassing. Um, I didn't think I would be, that bad, but it was. Yeah. He's super cool though. And I was, everybody was like, my developer was like, why didn't you tell him to do a quick TikTok with you or something, dude? You know? I was like, yeah, man, I didn't even think about that. That'd have been cool. Yeah. Wow, the premiums are really jacked on these. Still you. Oh, these have gone up so much. So frustrating. We would have done if I was late to simpler, so I didn't realize, but yeah, I messed that up. I would have totally got in on the biscuit right there and making money already. Hopefully some of you guys listened. What is wrong with Amazon? Jesus. Let me guess. Nobody's using Amazon anymore. They don't have billions and billions of extra free cash. Technicals aren't there. Yeah, they're just dumping the big names, man. Bob. I'm gonna pull up SPX on a 1 minute, 3 minute. I might trade in my small account. Wait, just be patient. Be right back, guys.